Good afternoon, traders. Today is Monday, February the 7th. I'm looking at the E-mini futures, and it looks like we're going to hit 1323. That's my target. I actually got long right off the open some SPY calls. These are the calls that I purchased today at $1.56, and I'm still in the position. I have 10 contracts, so right now I'm up around almost 600 bucks. And like I said, my target is around, I want to sell it at 220, my contracts. Now I'm going to talk about my long positions. Right now I'm long AIG. You guys know I've been in and out of this thing trying to catch the bottom over the last week. Well, I believe the bottom's finally in play, and I have about 30% of my portfolio invested in AIG right now. And I will not day trade AIG unless we get some really bad news out on it. This is going to be a position that I plan on holding for at least a week or two. I want to get up to the 45 level before I anticipate selling any of my position at all. And I am long the February 40 calls, so I will be holding these probably going into expiration. If I get a quick pop, I might take a little bit off, but I'm really happy with how my position in AIG is working out today. Abercrombie and Fitch is my next long position. It's had some good news lately, and then Goldman came out this morning and made some positive comments about ANF and AEO. I got long at 51.50, and that's right above this 51.12 key level. Looking at a longer time frame, this is a daily chart, then we have a weekly, then we have the monthly. Right now we're flirting with the 50-day or 50-month moving average on the monthly chart. The 200-week moving average, we bounced right off of that. That's perfect. And then as you can see, the 51.12 is the high that we put in from April. If you guys want some to day trade, this might not be a bad idea. It's not very volatile, but maybe if you just want to buy light positions on the open or on a decent pullback to the prior day's low, just let the thing ride. Like today, it opened at 51.5. It ran right up to our level. Look on the hourly chart, you see this? We had 52.34 as a level. It hit 52.38 and then it pulled back. Depending on your style, I have friends that like when they day trade, they like to put a basket of stocks together. So instead of going in a full core position and having to watch per tick, they'll get their favorite stocks and they'll diversify in small lots, and then they'll just let it ride throughout the day. And all the losing stocks, they'll eliminate them and then they'll add to the winners, and some of them they even hold for swing trades, and it's a very profitable strategy. Mine's a little different because I am moving more into swing trading and investing than day trading. But I'd never pass up a day trading opportunity. If it's there, I'm going to take it. And if it's an A trade, I'm going to take it on big size. A lot of things I'll buy, say I'm going to day trade something, and then I see strong buying going into the close. Most likely I'll hold it, going into the next open, hoping for a gap up. And it's probably working about 65% of the time on the trades like that. And the last one I'm long is Morgan Stanley. And I'm long from 30.15 exactly on the dot. Now we're coming up to some resistance around this 30.61 level. If we break above that and hold, I'm going to keep my position as long. If we pull back a little bit, I'm going to sell about 30% of my position and keep the other 70%. My target for Morgan Stanley is 32.29, and that is the April high. This is a weekly chart, so it's looking pretty good. I think we could get some more buying coming through since we held over the 28.80 level. And you see the 5-week moving average, which is down here. This is the oscillator that I have. It really working good when I combine this with my other strategy with the PPS and the volume, of course. Right now we do have declining volume on this up move and this little consolidation piece, but I hope it will start increasing once more money flow comes in here. Baidu ripped off the open again today, 2 points. FFIV up another 3%. Guys, you know how much we love these plays right here. 114.75 was the high of the gap down. We always mark this level. You know, if you've been watching my videos, this is one of our main trading formations. I am mastering the gaps and been making a lot of money off of it. So what we've been trying to do, instead of just, you know, getting long when we surpass the prior high from the gap fill, we try to buy on a pullback and we try to get a key level. Well, a key level is 103.75, which we bumped against before we started going up. I wasn't paying close enough attention to get long this stock during that time, but next time we have a gap on a strong company, I'm really going to enforce my long position. So we bounced right off of it. You see, we're looking at the monthly chart. We're making, looks like, I don't know what's going to happen, but there's a good chance over the next few months we can make another 52-week high. We're now above the 20-day moving average, and we're headed for the 50. Schlumberger, another 52-week high, and then we have that all-time high at 114.84. 100's becoming very realistic. I wouldn't be surprised if crude goes to 110. That will cause Schlumberger to rise up to 100. And OPEC came out today. Listen to this, guys. I'm going to put this article in the description, so click the link below. They said that if Egypt shuts the Suez Canal down, we could see oil prices, Brent crude, go to $200 a barrel. Do you know how many people that will bankrupt? Do you know how much more expensive our food will be, our gas, our cost of living in general? It's really getting ridiculous. It's bad enough that I have to pay $150 to fill my diesel truck up now. Imagine if Brent crude just goes to $150 a barrel, which will happen. I'm definite about that. It's going to be costing me about $220 to fill up my truck. How can people live off of that? And then I read an article on Henry Kissinger over the weekend. I'm going to see if I could find that. I'll put it in the description box if I can. But he said that he predicts that in the next year to 2 years, you will see rioting in the United States over a food crisis because of inflation. And he says the dollar's going to continue going down. We have to listen to these people. Looking at LVS, looks like these casinos are going to take a little bit of a break. These hotels and stuff. I don't know what's going on. Maybe it's in Macau or something. I haven't really read up on it, but they're pretty weak right now, so I'd stay away from any new longs. If MGM does get down to 1350, I'm going to be loading the boat. If you see where this thing came from, it's really been underperforming. We had that all-time high at 100, and then we hit a low of $1.81 before we started seeping back up. I know $20 will be hit. That's inevitable. The question is, how long do you have to wait before it happens? And I'm comfortable holding a position for a year or two if I know that undoubtedly it will hit $20. And then, you know, once it hits 20, the next stop is 30. So keep this on your radar, that 13.5 level. I'm going to wrap this up. You guys enjoy your day and good luck trading.